If someone demands payment with a gift card,
Hi. Hi. Hello, everyone. Welcome back to the stream. Good morning. Before we get into everything and anything serious today, take a second to settle in, grab your coffee, adjust your charts, and breathe a little. It's been a wild week, and I know a lot of you are coming in with questions, emotions, and maybe even a little frustration. So let's slow the energy down just before we dive in deeper. And actually, before we jump into the financial world, let me ask you something much simpler. How's your day going? Drop it in the chat. Did you have a crazy day at work? Did something good happen? Are you excited? Are you tired? I like to know where everyone's at emotionally because trading isn't just charts and economic data, it's your mood, your mindset, and mental bandwidth. So let me know how you're doing. While you do that, I'll set the tone for today's session. This stream isn't just about reacting to markets. It's about building a calm and clear framework so that we control the narrative instead of letting the narrative control us. Now, today's session is an important one, not because something collapsed and not because any single stock is going to magically save the world, but because this is one of those moments where traders need perspective more than predictions. So before we jump into the charts, sectors, AI, or earnings, let's start with the bigger picture of why we're even having this conversation in the first place. Right now, a lot of people are looking at the headlines, glancing at the tech sell-off, watching the Nasdaq fade and thinking, something's wrong, something's broken, the AI story is over. But the real truth, is often completely different from the emotional reaction. And that's exactly what we're here to unpack today together. So we're going to take the noise, slow it down, and flip it into clarity. Because if you don't understand the structure behind what's happening, then the next few weeks will look so chaotic and contradictory. This isn't about panic. This isn't about guessing. This is about understanding what's really going on beneath the surface. So, with that mindset in place, let's officially begin today's topic. Now we're on the Broadcom's extended hours chart, and after an emotion pullback in AI tech stocks, the market didn't weaken the way many people feared. Instead, we're seeing a very classic structural market. Yesterday, three major indices were mixed. The Dow and the S&P 500 were up. While the Nasdaq pulled back. On the surface, it looks like a clear divergence, but the real key signal is that most stocks actually went up. Money didn't leave the market, it rotated around. From a macro perspective, so from the macro perspective, labor data continued to soften, which strengthens expectation that the Fed can keep cutting rates next year. Bond yields also moved lower, supporting risk assets. Trade data also came in better than expected, helping stabilize confidence in the US economy. On top of that, the Fed started liquidity operation. Short-end liquidity is clearly back. So, the overall backdrop for equities isn't bearish. So back to the core of the market. Tech and AI were under pressure yesterday, and the emotional turning point largely came from Oracle. Earnings mixed expectations. At the same time, the company sharply raised capital spending, which triggered concerns about burning cash to buy growth. That fear spread quickly and dragged the entire AI supply chain, including heavyweights like Nvidia, in the short term. But this looks more like a reset of expectations, not a rejection of the industry itself. So, another thing that was very key insight for us yesterday was Broadcom's earnings were very useful contrast. And their delay in releasing the financial reports actually triggered some pullback, but the numbers weren't actually bad. Revenue, profits, and guidance were all solid, and AI growth is real. But the market still sold it down for one reason. It didn't beat expectations that were already stretched to the extreme. So basically, what this tells you is why there was this pullback here. Number one, delay. And also, it didn't meet the top. People were expecting way better. However, it was solid. There was revenue, there was profits, everything was solid, and the AI growth was proved to be real. But for one reason is because it didn't meet the expectation that were stretched far ahead of what actually. So
Before we get into everything and anything,
it's not a rejection
today,
it's still good,
take a
but that
second
tells you
to
the
settle
market is
in,
shifting
grab
from
your
storytelling
coffee, adjust your
phase
charts,
to
and breathe
a fresh
little. It's
repricing
been a
based
wild
on
week,
cash flow
and I know
and real
a lot
execution.
of you are coming in with questions, emotions,
So,
and maybe
what
even
do
a
we
little
see?
frustration. So let's slow the energy down just before we dive in deeper. And actually, before we jump into the financial world, let me ask you something much simpler. How's your day going?
Why yesterday
in the
this
chat.
happened, as I mentioned
Did you
just
have a
now,
crazy
is
day at
because
work?
of the delay of the annual report, which can make people question why was it delayed. So, do you think today Broadcom can help the tech line glory again? So, what do I see? AI heavyweight stocks cooling
Did
off
something
on
good
one
happen?
side, while
Are you excited?
Sicily's
Are you
small caps
tired?
and companies
Always
with
like to
improving
know
fundamentals
where everyone's
move
at
higher on the
emotionally,
other.
because trading
Index
isn't
movements
just
varies,
charts and
but the
economic
overall
data.
direction
It's your
hasn't
mood,
changed.
your mindset,
At this
and
stage,
mental
the key isn't
bandwidth.
betting
So,
on one
let me
sector to
know
save
how
the
you're
market,
doing. While you do
but
that,
understanding
I'll set the
how
tone
money
for
is
today's
rotating
session.
across
This
structures.
stream isn't just about
In short
reacting to
form,
markets.
AI
It's
didn't
about building
collapse.
a calm and clear
What
framework
collapsed was the
so that we
overly
control the
one-sided
narrative
consensus.
instead of letting the
And
narrative control
Broadcom
us.
isn't a
Now,
hero here to
Today's
rescue
session is an
everything.
important
It's a
one.
signal
Not
pushing the
because
market
something
back towards
collapsed,
a
and not
rational
because any
price.
single stock is
The next
going to
phase
magically
won't
save the
reward
world,
imagination
but
and emotion.
because
It will reward an
this is one
understanding
of those
of
moments
structural
where traders need
opportunities
perspective
and
more than
discipline to
predictions.
execute.
So before we jump into the charts,
So,
sectors,
after the
AI,
AI
or
crash,
earnings,
do you
let's
think
start
Broadcom
with
can
bigger
save the
picture
market?
of why we're even having this conversation in the first place.
In today's live
Right
stream,
now,
we're
a
not
lot of
rushing to
people
stare
are
at
looking
red
at
and
the
green
headlines,
candles. We're not
glancing
rushing
at
to
the
throw
tech
out
sell-off,
conclusions.
watching the Nasdaq
So let's
fade
make
and
it crystal
thinking,
clear before I
something's
give you the
wrong,
answer.
something's broken.
Is the market
This-
actually
the AI
crashing?
story is
Or
over.
is it just rotating
But the
into a new
truth, the real
structure?
truth,
Because
often
if you
completely
look at the
different from the
Nasdaq
emotional
and you
reaction.
only stare at the
And
AI
that's
mega caps,
exactly
you
what
feel
we're
like,
here to unpack
yeah,
today
the vibe is
together.
off, tech is weak,
So,
AI
we're
is
going
done.
to take the noise,
But
slow
if
it
you
down,
zoom
and
out,
flip it into clarity.
you realize
Because
what's
if you
really
don't
happening.
understand the structure
This is
behind
actually a
what's
classic
happening,
and a
then the
healthy
next few weeks
structural
will look
rotation.
so chaotic and contradictory.
Oh, your YouTube.
This isn't about panic. This isn't about guessing.
So let's fix and rationalize the first misunderstanding that everyone is talking about. Is the market really weak? Let's start with the most obvious thing. Yesterday, the major indexes looked like this.
So, let's start with the most obvious thing that was yesterday's major indices looked like this. The Dow was up more than 1%. And the S&P was slightly up, and the Nasdaq was down. Most people see that instantly think it's over. Tech is dragging everything down. The rally is finished. But I want to ask you something. How many of you actually checked the internal market beneath? Inside the S&P 500 yesterday, nearly 3/4 of stocks were up. Cyclicals were up, small caps were up, traditional sectors were up. So, what does that tell us? Money didn't leave, sentiments didn't collapse, the direction simply changed. So, this is a classical setup. Indices look split, but the internal market is actually strong. And here you can tie So now let's talk macro. A lot of people missed a major shift. Macro data has been pushing the market towards a more dovish expectation. Labor data is weakening. Jobless claims came in early above expectation. What does that mean to the market? Not bad news, it means the Fed has more reasons to cut. At the same time, Treasury yields are moving down. That's one of the most direct sources of support for equities. And here's another key point. The Fed is back in the short end, buying and injecting liquidity. Simply put, liquidity is still alive. And as long as liquidity is alive, it's very hard for the market to truly collapse. Do you think indices not moving together is a problem? I think a lot of people are stuck on one question. Why the Dow and the Russell push higher while Nasdaq is struggling? The answer is very simple. Different place, not different direction. Historically, this happens all the time. Some indexes lead, others follow. Right now, the Dow and small caps are leading. So what does that tell you? Risk as appetite hasn't disappeared. Money is looking for better value per unit of risk. As long as liquidity isn't being drained, the major indexes will likely converge back towards the same direction. So now let's talk about today's topic. What really happened to AI? Why did it suddenly dip? Now we get into the heart of today's topic. AI didn't collapse, but AI sentiment clearly got corrected. And the reason is one word. Expectations got too high. Let's start with Broadcom. What are the key numbers to watch for Broadcom?
Can't find the horizontal line.
No, or I already found. Is it? 368.
Something else. Similar.
Can you tell them? Can you go say? I can already.
You working at now?
Hmm.
Working at it? No.
Okay, just not gonna.
It's not. Okay. ใช่ไหมเพงั้นไม่ขาดเลยอ๋อไมโครโฟนไมโครโฟน
All right, so two key numbers for Broadcom to watch out for: 368 and 398. 368. 398. So I know many of you who may have bought above are currently at a loss. However, I would say be patient. One key level you need to look out for is 368. If it holds this level, it may be an option for you to buy, or it may be an option to cut your losses. However, why this may have been a trigger: in a normal year, Broadcom's earnings would look great, revenue is up, profit is up, AI business growth defined, divided raise. So why didn't the market reward it? Why do we see that the market is not rewarding Broadcom's financial year? Because The market has been spoiled by constant blowout beats. Now it's not, did you do well? It's, did you do something insane again? So, Broadcom didn't drop because fundamentals failed. It dropped because the imagination premium got cut. That's a very important shift. So, Broadcom holders out there, key levels for you to watch for: 398, 368, now, what was the trigger? The real trigger was Oracle. Oracle was the spark that lit up the entire AI sentiment and reset. Cloud numbers came in below expectations, but capex jumped massively, up to 50 billion. Yesterday, we're looking, Oracle's volume was very high, indicating a buyer's market, and the market's first reaction went on is, you're burning more money, where is the payoff? But Oracle also did something strategically important, pushing a bring your own chip model, shifting from heavy assets towards a platform approach. Long term, that can be rational, but short term, the market will vote with its feet first.
Try and refresh. Ready?
Really? Okay. So, for Oracle, long term can be rational, but short term, the market will vote with its feet. So, it's not that the company is wrong, it's that the cycle position isn't friendly. Yet, now let's see. Yesterday, an important signal came back, which was this level. Is this indicating a possible base? Is this indicating a possibility of a rebound for Oracle? As we can see that there are two indicators here for us. Which possibly may indicate
Who's all the unrelated weighted? Because maybe it's the boost will make it like all those unrelated, that's how you can just close. Wow, okay, good. It's the computer problem.
what we're looking at here is a proposal. There is two chances that Oracle may move now. It's either we'll look at a rebounce with a possible reversion, or we may look at something like this and a possible more flow. However, this is where you watch out. Set your base. Don't expect anything until you see a confirmation. Currently, this cycle position isn't very friendly as it is very unpredictable. However, as you can see, the volume that was concluded yesterday is indicating a strong buy signal. This is where very large firms, large companies, large investors enter with huge market cap. Now, let's see NVIDIA. Is NVIDIA's problem actually big? Their market can affect index significantly. Even a small wave affects the market. Do you know why? Because NVIDIA has a very large market cap, very strong fundamentals, and even a slight wave from them as such affects all AI sectors. This pullback from NVIDIA made a lot of people panic. But if you have to understand one thing, NVIDIA wasn't disproven, it was just repriced. The market is realizing it's no longer the only option, but it's still the most important option. Because why? Do you know what NVIDIA does? NVIDIA is in every AI sector. They are the largest chip manufacturer with 4 to 5 trillion market cap. So the market is not giving up, it's just realizing it's no longer the only option, but it's the most important option. That can compress the valuation, but it doesn't destroy the core of the NVIDIA. So, do you know where did the money go? Where are the structural opportunities? This is the most important part today. If you ask, where is the money going right now? The answer is 3 buckets. Cyclicals, small cap companies, and companies with real cash flow and real delivery. Let's name a few examples. So these include Disney. They are part of industrials, traditional value, even space-related names, depending on your watch list. So what is the market doing? From storytelling to delivery, from one single mainline to multi-structural rotation. So no, AI didn't collapse. What was collapse was the one-sided consensus expectation. Expectations this year for AI delivering were set too high. And now that the financial reports are coming out, people are like, oh, hey, it's not what I thought. Number 2, Broadcom isn't here to save the market. It's here to remind the market to return to rational pricing. And number 3, the next phase won't reward stories and emotions. It will reward understanding structural opportunities and executing with discipline. If you're still trading this market with the old chase one main theme mindset, you'll get distorted signals. But if you understand structure and rotation, the market actually becomes easier to trade. So, I have one question for you guys. Do you know why the aerospace industry has a strong uptrend within the past 2 days? Anyone? Comment below. I want to see why you think. So, do you know why? Because Elon Musk SpaceX is bound to confirm an IPO. SpaceX IPO rumors are almost confirmed. The biggest driver of the recent uptrend isn't ordinary industry news. It's reports that Elon Musk's SpaceX is preparing for an IPO target for 2026, raising well over 30 billion and valuating the company at around 1 to 1.5 trillion USD. Now, although SpaceX hasn't officially flipped the paperwork yet, multiple major outlets reported that SpaceX plans to go public in 2026, raising massive new capital. This IPO could be among the largest in history and give SpaceX a valuation rivaling or exceeding major aerospace and tech companies. Why this matters for the whole aerospace industry? Number one is the physiological effect. A SpaceX IPO legitimizes the broader space sector, making smaller space tech and aerospace stocks seem undervalued by comparison. What I mean by this, if people are seeing Tesla go up, people are also gonna follow the trend with other aerospace companies, smaller, but they will think that they are undervalued by comparison to Tesla. Number two, the benchmark effect. A high anticipated valuation shifts investors' expectation. If spacecraft and satellite business can scale to trillion-dollar companies, the whole theme looks more reliable and valuable. So, investors aren't just trading SpaceX speculations. They are rotating into public traded space-oriented companies. Number one is like EcoStar, which owns SpaceX's linked stock. Number two, Rocket Lab and Redwire and other companies, space players have jumped as IPO buzz grows. Analysts also raising targets and upgrading ratings for some of these stocks because SpaceX IPO could draw institutional capital into the sector broadly. So let me give you an example. EcoStar surged because it holds SpaceX stocks, and its value effectively acts as a public proxy for SpaceX valuation. So this is not just an Elon Musk hype. It's not only Elon Musk chatter, its rational investors are using includes rumors that standing in private markets, for example like SpaceX, share values valuing it near to 800 billion USD, signaling genuine growth, not just speculative hype. The IPO narrative boosts prospective industry growth prospects, especially SpaceX isn't a small startup but a company with real revenue via Starlink satellite internet services, expected to reach tens of billions.
So, before we get into what this means, do you think Tesla stock can hit $460? So, let's go into the news before you let me know what you think. There's news of potential SpaceX IPO-led aerospace and space tech ETFs and stocks to rally because new investors now see a plausible exit path and valuation benchmark. IPO often attracts new capital and create valuation benchmarks for similar companies. For example, EcoStar shares jumped partly because they sold SpaceX stock from previous spectrum deals. So, do you know why EcoStar's shares jumped? They partially jumped because EcoStar holds partially the reason for this high jump for EcoStar because they hold SpaceX stocks from previous spectrum deals. So every new SpaceX valuation headline can boost EcoStar's public stock price. And stocks like Rocket Label, Redwire, and other pure-play space companies have seen double-digit gains as traders position for a broader space rally. Let's just take a look at that. Another company, Rocket Lab, seen double digit also because of their space, because of that they are validated by SpaceX's public pricing. Even smaller space stocks surged. So, what did I just ask you just now? Is Tesla gonna get 460? It just did. So, on the 1 minute chart, Tesla price is clearly ranging and moving sideways. For Tesla to break through that 460 level, we need to see strong volume coming in. Right here, we're looking at strong volume. The volume is increasing. We passed 460, 461. Volume is increasing and price is moving higher. That's a positive sign. It tells us buyers are stepping in, not just price drifting up. If this volume continues and holds, Tesla has a real chance to test and possibly break through the 460 level. Without sustainable volume, though, the move can still fade back into a ranging zone. So, the bottom line, yes, the main reason for the recent aerospace uptrend is the SpaceX IPO narrative, not just random market moves. So, if the price breaks 460, after the retest would confirm strength and suggest buyers are in control. If it fails to hold the 460 and drops back below 460, then the break likely failed and price could move back into the previous ranging zone. However, if price can hold above 460, then the next potential target is around $470. If it holds 460, next potential target is 470. However, if not, then we possibly go back into a ranging zone. But be careful here. 470 is a clear resistance level. Expect selling pressure and possible rejection in that area, especially if the volume slows down.
right. Thank you guys today for joining today's live stream. Hope everyone had fun and learned something new.